we go. Yeah, so I got a lot of requests about charting with the trend writer. So what you see in the background is going to be the trend writer for today. And I will tell you how to use it in combination with the general technical analysis. All right, so yeah. So let's just go to the alert, huh? Shall we? Because that just popped up. So let's see, cable. Yeah, and that's beautiful, isn't it? And there was somebody who asked me about market selection. Yeah, so let's start here actually. So I have my trading view always split into those three charts. On the left-hand side, we have the daily. The top right is the 4-hour, and then we have the 2-hour. So I don't really do multi-time frame analysis. I don't think it is, yeah, it's, for me at least, it doesn't work the way people think it works. I trade directly on the different time frames. So if I see a setup on a daily, I will take it on a daily. If I see it on the 4-hour, I will take it there. I don't do top-down or whatever multi-time frame analysis. I just trade every single time frame when there is a pattern. So here in this case, what do we have on a daily? Not too much. We have an uptrend which recently flattened. But if you are looking for market selection, the first and most important principle what you need to understand is that, are you a technical trader? Do you follow technical analysis? Do you use price chart? Do you use chart formations? And do you use chart patterns? Then you have to look for those things in your charts. You need to find a chart where you can apply technical principles. You don't trade a chart where you are stuck in a tight range with lots of up and downs, a lot of volatility and no patterns. You look for patterns. You look for very well-defined charts which have support and resistance levels that get respected. You look for clean trend waves. You look for nice patterns. So here, for example, British pound US dollar. We were in this uptrend, and now recently we have started to make this triangle or wedge. We had already a false breakout here, which got signaled here by the trend writer. That's okay. I jumped on this too. I took a loss, totally fine. And it seems like now we do have our second possibility here. You can see we haven't really cleared the previous low yet, so that is one thing to really keep in mind. We haven't seen a confirmed breakout. The current candle is still, it's just started to form. So we do have 4 more hours until we can really see, is this a breakout and this is not. And one of my students, he just wrote on the in the beginning of the chat that one of the best, or he said that he started using the candle close filter, which means that you don't make trading decisions when the candle is still forming. So you only make trading decisions when a candle has actually closed. This sounds very simple, but it's going to have a huge impact on your trading. You will often stay away from false breakouts, and you will often, get into high probability trades, not really later, but with more confluence. And that is really, I call it my insurance, because it adds a little bit more of another confluence factor to your trading. Entering only when, or making trading decisions only when a candle has formed is sounds simple, but if you choose to apply it, then you will see, So that is going to be a very, very important tip. If you take me up on this, you will see how this will completely transform your trading probably. So this is quite interesting. It is not there yet. What we do have going for it, the last candle is it's a pin bar, obviously. And now you can see the price is struggling a little bit. So we're going up and down. And we haven't cleared this level yet. There can be lots of up and downs. Obviously now this is an important area where a lot of traders will have an eye on, because a significant break will probably signal for many traders that there's going to be could be a prolonged downtrend coming. So wait patiently, not a trade yet, sit on your hands, And wait. So that's very, very important. Yeah, what else do we have? Yeah, Arian, that's a good market. Yes. So yeah, this is a very, very interesting and yeah, that's the trade that I pretty much laid out for our premium members. I am short already here. So this is where Friday closed. We gapped into the level, made the retest, and then closed here below the previous close. So yeah, that's when I got in and I'm still holding. So yeah, it's not a trend rider signal. That's okay. At least not on the 4 hour. On the 2 hour, it certainly is. You can see that. So you can see here it turned red and it confirmed with the trend rider as well on the lower time frames though. And this is also the first time that you got a bearish signal here since we started this uptrend here. So you can see that even though you might think, oh, this is late, it's not late. It's just keeping you out of periods where traders try to short here and here and here, but there's never a red signal here as well. You might run into problems with the premature breakout reversal trade. Yeah, the trend rider is designed to keep you out of troubles as much as possible. So yeah, Kiwi, very, very interesting. So yeah, good call, Arian. And by the way, I see we have almost 70 people here. Hello. This chat doesn't have a public, or this webinar software doesn't have a public chat, but there is a box called questions and you can post your questions in there. So I will see them then, and yeah. Sydney, sure I can. So silver, yeah. Let's go to the higher time frames. It's a little bit tricky. So yeah, I was looking to trade this as well. You have a few potential shorting points, but yeah. So right now, I was expecting a bounce a little lower in this candle. We kind of did well. We barely touched the previous low, so we did move into the wick. Those wicks are very, very important points because they show strong rejections or reactions. And you can see so far the price moved back higher from here. So yeah, this was a decent short setup, but now it has failed, obviously. And right now there's nothing else here on silver to do. You can see that. Where are we in the bigger picture? Yeah, we have premature, or we had tried to, here was an interesting short that had a little bit of a follow through. This could look like, or it actually does a little bit look like a head and shoulders with a lower high here. But now you can see, yeah, it's not a, if we move below past this point, you might be able to get into another short, but right now I would not really recommend trading it, at least not on the 4 hour, the 2 hour. You see the trends a little bit clearer, but still, this is what I would call a V top, or in this case, a V bottom. Can see that. The market does not give you any trend waves anymore. It's just shooting up and down, so no clear price action. Here, this is a different picture. You can see we make clear trend waves on the way up, higher highs, higher lows. Then here we shift, and now we are just bouncing around. So this is not a good market to trade right now. I'm waiting here for the market to pick a new direction. I'm not going to get involved in the middle of this range here right now. Shingi gold as well. I was short on it, but let's take a look. Shingi gold. All right, let's take a look here. And I see a lot of questions. That's great. If you have any questions, just make sure to post them in the questions box. I will go through them one by one. And yes, that's the way to do it. So you can see here gold as well. Here, this candle was the trigger for potential short, and we had a little bit of a follow through right now. Yeah, if this candle closes like this, I would exit a short position if I had one. It's not too convincing right now. If you want to trade the retest, you need to wait for the price to clear the previous low and then get in. Let's move this one. It's already here. It's convenient. So yeah, you can see a break below that. This would be quite helpful. Right now, if it closes like this, if you're short, I would I would close the short. I don't have a position here. Hakim, I think your keyword is broke. It's all caps. All right, so there are a few questions. Cool. I trade reversal. So I'm reading the questions out aloud because obviously there's no public chat. So I trade reversal patterns on a daily, 4 hour and 1 hour. Assuming I get a breakout with nice volume from a head and shoulders or wedge, for example, what candle should I wait to close before entry? Well, for example, it's quite clear on a head and shoulders. You need to wait for the neckline to break. On a wedge, you want to see that the market is breaking out of the wedge into a new low. And you always, that's the general rule for breakout trading, you always want to see a close outside of the pattern. Preferably, you want to see a good close outside, not just barely closing outside the pattern, but you really want to see a good close. So here, for example, here was actually a range market, and people would say, oh, this is a close outside of the range, but really, is it really breaking the previous lows? We are just closing on the low. In stock trading, in breakout trading, there's usually a rule applied to how many percent below the breakout point or below the structure, the support and resistance. You want to see a breakout below. For me personally, a rule of thumb is I just don't want to see the market do something like this. I want to see that the market is really breaking out of the level, and not just here barely crawling over. A-star, do you draw support and resistance right against the wick or against the body? Yeah, so there are different ways how you can do it. I also don't like the general way supply and demand is taught. Let me try to find a few examples, because there are different ways how you can and should use or look at supply and demand for that matter. Okay, I know an example. I think it was the CAD Swiss or the US dollar Swiss. Let me just pull it up. No, it was definitely not this one. And it definitely wasn't this one. All right, nevertheless. All right, let me try to find a picture. Okay, here first. Perfect. So there are different ways how I look at supply and demand. The first major important point is, so there are two supply and demand types, I would say. The first one is the general one, where you look at either a strong trending market like here, and then you go to the origin, which was either here or somewhere around here. And those then are your general supply and demand areas. Generally, you look for a small consolidation or just the origin of a strong and explosive trending move. So this is a very general how most people will look at supply and demand. And you can see then the next time we dipped into it, we overshot it, but we started a little bit of a rally again. So again, those things won't work all the time, but they are fairly accurate. And you can see here as well, we had this one from this turning point. We dipped back into this level, overshot it with a pin bar, and then we rallied a little bit off of it. And that is one way of looking at supply and resistance. There's another type of supply and resistance which I think is often overlooked, and I forgot. I will find it. Don't worry. Swissy Aussie. Yeah, not really. All right, but that's it doesn't matter. That's a good example as well. This is the second type of the supply and demand. You have to ask yourself, what is supply and demand? What do traders look for when they talk about supply and demand concepts? And usually you want to see a level or a zone where you have seen previously a very strong reaction. And those not necessarily only are the general supply and demand where you have a little range and then you have a breakout, but it could also be something like this here. So this is obviously showing you a very, very strong reaction. The price shot up and then within the same candle dropped lower. It doesn't matter if this was news driven or whatever this might be. The only thing we need to know is that this is clearly a level or an area where something major happened previously. And here was so much selling interest and a lack of buying interest that the market not only returned to back to the open, but it started a new sell-off. So there's so much selling interest in this area. Going forward, how would you use it? Well, you're not blindly going to short just because you hit the supply or the demand area, but you are going to wait for signs that the market is turning around. So maybe you get a move back into this area, then you get a little bit of a head and shoulders, and then you exit or you look for a short. Or if you take a long entry here, you are long, you use those areas for take profit taking. But those areas, the extreme areas, they can be used for supply and demand trading. I really like them in my trading. I look for very, very extreme price movements, and then going forward, they often hold as supply and demand as well. So you always want to look for where has something significantly happened on your price charts, and then you will use that going forward as well. All right, there. I hope that helped, Esther. You're very welcome. Aziz, yes, we had just the update for the trend writer that is working on for TradingView, and we are going to release a new update soon where you will also start seeing the dots on the trend writer. No, Elias. Where are you going to put your stop loss if we are using the trend writer? It doesn't really matter which method I use of mine. So let's take a look. Yeah, let's take a look at the British pound US dollar, for example. And this is, by the way, not a trade signal or anything. This is just a trading, an example for how I would size my, or let's assume the market breaks out and we close here. Where do you put your stop loss? And before you enter, you put your take profit, first I would always recommend you look for where do you put your stop loss. That's more important. And for me, when I put a stop loss, I look for natural support and resistance. So here, for example, is a very strong support and resistance. Obviously, the market has shown us a few reactions. So I would like, if the price closes here, I would like to get some barrier between the price, the entry price, and my stop loss. So my stop loss in this case would go above this area. To protect my stop loss with this resistance area. If you are very, very conservative, you would look for a second area, natural support and resistance, swing highs and lows. Here is the next area. You can see we have had multiple touch points, 1, 2, 3 points, where the market struggles. So if you're very conservative, you would add two barriers between your entry price and your stop loss. So here's the entry potentially, here's the first, and here's the second barrier, and then here would go your stop loss. That's how I always use it. And it depends on how how conservative or how aggressive you want to enter your style, your trading system. That is how. And very important, don't put it right in the area. If you have identified a support and resistance area, don't put your stop loss right in the area. That's not good, because the market will often come and retest those areas. Also, you have to figure in spread, obviously. That's very important. Don't you use a support level at 130? Well, let's take a look. So the market doesn't care too much about this specific level. So 130 is here. Here we missed the level, here we barely touched it, here we overshot it, here we just had a small reaction, here we overshot it, here we overshot it, we missed it. So even though this is a round number, it's not mandatory to have it as your support or resistance level. You need to check at the current market structure, where are the levels right now? Here's one, but those are not important levels. Those are just temporary swing points. They don't have too much significance right now. Of course, the markets could start using it, and then maybe you start putting it on. But for now, those are just small swing points. So I look for very strong levels where you have multiple touch points. And this way you can avoid getting confused. Many people experience paralysis by analysis, where they have too many levels on your charts. So that's, Lehasa, no, you don't have to buy it, the Trend Rider again. If you have the Trend Rider already for MetaTrader, just send me an email and I will give you access. So whoever has the Trend Rider or wants it, you will now get both licenses for TradingView and for MetaTrader, and then you can also